I've started the recording officially. Good morning. Welcome, everybody, to the Market Watch Group Weekly Market Prep. My name is Scott. I will be your host. Welcome, Vladimir. Vladimir, I was popping into the community today, and I'm going to start talking. I'm going to get the competition going to get people interacting. We are going to make that community. We always talked about what it could be, right? With Discord, it could be great. You could maybe come on here and you'll be another trader just like you who's just looking around and wants to have a conversation. It could be this. Well, it won't be if we all don't start, right? Pushing, engaging. I'm going to have Glenn. So when I see someone like Vladimir going in and liking things and engaging, let's do it. Let's see the people move up the leaderboard. It's already plugged in for the gamification. It's ready for us. Pretty soon in the beginning of the year, I'm thinking about some trading contests, which I think will be very cool, right? Some monthly trading contests. I didn't get because of the Thanksgiving. I've had 4 to 5 college students at my house throughout the week, including 2 of my own. And so I did not get the poll ready for today, but I will. Even TradeStation rang the bell at 4 Eastern. No one knew what time it was on Friday. So Sandy's in. She's like, it's on. Sandy's going to move up the leaderboard. Okay, let's get into it. It's great to see everybody. You know, I love Sundays. My most favorite days. Glenn will be with us. Remember that it's like right on top of us. But I'm going to be out of pocket for 2 weeks. And I'm getting Glenn up to speed to make sure he's ready to move in full time for those 2 weeks. Or he'll have Gary. Some of you have met Gary before. He's another one of our coaches. Gary may come on to help out. But I will be, I'll be traveling for the Christmas holiday. So I was like, oh my God, that's in 2 weeks. I leave 2 weeks from today in the evening. So I'll be here on that day to do the posture, and then I'll be out. Glenn will be taking the reins through the holidays. Are you asking if I'm a bit nervous about how I'm going to be managing my trades? Yeah. I'm used to like Disneyland trips. So I've got to really like prepare myself for the time zone and lowered accessibility. So Sandy, maybe I'll reach out. We'll have a conversation about some of the things you do. I've got Disney down. I can trade in line on my phone as long as I don't disrupt the trip. But over there, I don't know. It's going to be very different. So I have to really be careful with. It's not an experience I'm used to traveling that way where I'm off on time zones and stuff. Anyway, we'll talk about it because that's part of what happens when you trade, right? How do you travel? What do you do if you're a very active trader? Okay, let's get into it. This is for educational, illustrative purposes only. We're not brokers. We're not advisors. We don't give advice. We don't give recommendation. We're just a group of traders working together to be the best possible traders we can be. Miguel says that is the challenge I have. Sounds like a good trading video. Yeah, traveling. You're not wrong. That's a great idea, right? You have some drinks, you don't wake up on time. Yeah, no. You know what? I'm glad you flagged that, Miguel. Maybe you and I, too, will have a side chat about some of the challenges you've had and some of the things you've done because it's funny. I was thinking about it. I was like, wait a second. I'm like, oh, yeah, I've traveled before. It's so different. Trading going to Disneyland is really not that hard. Right? But now we're going, like, my kids are older, and I'm like, wait, we're traveling differently. I don't think I understand this. Sandy's always on travel time, right? Exactly. Okay, what are we doing today? Market posture. first and foremost, market posture. It's strong. I expect it to stay strong. We're moving in December in a great place, looking for the sound. I mean, everything's lined up. That's one of the reasons I'm concerned is I'm like, look, I expect to have, I'm not going to be like, all right, let's dial back. Dial back. This is my market. This is what I've been waiting for. Dial back. Dial up. That's where I am. That's what makes it a challenge. Economic calendar. What do we have coming up in front of us? Sector searching. Again, I got to put some time on my slides. Maybe I'll do that on the plane. I don't know. To get these adjusted because we've pushed sector searching to Tuesdays during the trading foundations. We'll do some searching there. Keep our watch list fresh. We'll put together the early week opportunity list. Talk about trading plan section of the week. Okay, actually, is it goals or did we finish? I think, are we on goals? What did we do last week? I think we did record keeping, or did we do goals? I can't remember. It got a little disorganized towards the end. If you're new, what am I talking about? I'm talking about our trading plan outline, which you can find, hopefully, as you're new. We're building the onboarding experience. So hopefully the first thing you get there is you're like, hey, welcome to the page. Check these things out. And one of those things is the new member tour. And as you watch the new member tour, you realize where everything is. Where will you get alerts? Where can you have conversations? Where will you join meetings? Where can you go get resources? Where can you go do some education on your own? Because there's a section for all of that. So when you go to the resources, that's where you can find things like record keeping templates and market watch logs for market posture logs. You can get your trading plan outline. You can get, right, there's a lot of good resources to download, to have. Make sure you go get that. If you're new and you've gone through the tour, tell me how you like it. It's brand new. It's like just been there for like a week. We're trying to make sure, again, that it's as easy as possible for you to get up to speed in what we're doing. Starting all over again, right? Yes. Yes, we are. All right, let's get to it. Let me move this out of the way. Oh, I have a performance problem? Come on. I just logged back in. Everything seems to be working. Okay. If you're new, what are the couple of the things that you can do? You can download a blank version of this market posture log, just a blank version. And you're thinking, I don't want mine blank, Scott. I want all of what you have. I want it to go all the way back to, previous years. Great. You can go download. You can go copy and paste this whole thing, paste it into yours, and then start fresh from there. Where are we starting from? Today is December the 1st. Crazy. It is crazy that it's December. That's my problem these days. I feel like it takes me to about like mid to late October to adjust to the new year. I'm like, 2024 is really getting going. And then it's like, holy crap, it's over. I don't know what my problem is there. Okay. Long-term trend first. Let's move our time frame. I was so excited. I was thinking about it all week, and then I was just like, I didn't get to it. I'm going to have it where we will submit our scores, and we'll keep the market posture group's composite score, where everybody who puts their score in will add to it, and we'll see what the average score is. I'm very curious to see. I don't think it's going to fundamentally change a lot, though. Keep that in mind. I think as I, pop in, I have a feeling that it's going to be pretty close to where we are, to where I am as on a week-to-week basis. Okay, first things first. You'll notice as we look at the long term that the market's fought very hard to get back into this. It's holding on to this angle. I'm starting to wonder if, no, let me duplicate this. I'm starting to wonder if it might be the right angle, but I'm going to... But that's the new trend. I'm thinking, well, wait, well, maybe it's not that we can't get back up to the old one. Maybe I need to reset my thought process. So if it were to do this, what does that mean? That would have me take my score back to that 1.5. When we fell out of it, I was like, wait, we fell out. But the angle is there. I don't know. Give me your thoughts on this. This is where I'm starting to think, do I already have the same angle, but we just sort of shifted? We just sort of shifted from here to here to here. And now that the shift is complete, the angle's there, but we just have moved down one level. You guys kind of see what I'm putting up there? I'm a little leaning towards that. And again, it's not like anything happened last week that is like, well, do this. I'm just organically looking at what we have here and I'm thinking, does that make sense? Let me change these colors to make this. I want to hear from the group on this one. Let's edit properties and make this blue. And let's make this one. Nope. Let's edit properties and make you. So it's the same angle, right? But it's a different level of angle. That's my question. Weigh in. I don't know that I'm there yet. I'm thinking about it because I'm looking at this thinking, wait a second, this is now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 20 weeks. 20 weeks, that's, 5 months. That goes back to July. I'm going to come back. I'm going to let that percolate for a second. Let's move on. I'm going to leave it as is for now. But it's like, do those blue lines as our long-term trend make more sense than the green lines? Because the green lines we haven't, right? But we don't have a different angle. I don't know. I'm going back and forth on that one. Let's talk about short-term. Short-term, what happened? Well, let's go back and see where we are. Sandy says, I feel like it's more stable. Miguel says, yes, interesting. Same angle, just different ranges. Okay. If we shift our angle, are we not moving the goalposts in our market watch evaluation process? Remember, Press, that's a great question. And I'm glad you're willing to challenge it. But remember that our thought process is what is most representative. And so let me go back. This is the right conversation, I believe, for us to have. The reason we changed our angle or our score was because we weren't getting up to that upper line of that green angle, right? We were saying, hey, if we're not getting to the top of that, it doesn't matter that we hold the bottom of that. So in that regard, what was happening is we were focusing on the fact that down here, like it just is like flirting, but couldn't hold. And up here, we were never getting near it, right? And so in that, there we were saying we're not maintaining that angle. But it was just, maybe it just sort of shifted under the weight of things. but that realistically, it's actually now the same angle, right? So if you look, we aren't changing anything. We're saying what do we see as our angle right now? Well, I look at the blue and I think that blue looks pretty reasonable. It's been in that range for 5 months, up and down in that range. And if I look at the blue, it's exactly the same angle as green. It just sort of shifted down organically into that lower level. We're not changing our process. What is our process? We're evaluating what is the long-term trend. How do you score the long-term trend? Well, if you go look at a chart and you're like, here, let me draw some trend lines. Boom, boom, you draw them. But the problem is that's not what, we don't draw trend lines and walk away. We monitor, we evaluate, we adjust. And that's an ongoing process to say, has this changed? So I would say, no, we're not changing our process. We're adapting to what the market is showing us in order to see how do we evaluate that now. Now, what I'm open to is if someone says, wait a second, I don't think that's the same, right? Let's make the arguments and let's talk about it. When we look at the current score, we're measuring angles, right? We have 3 different angles in here. We have purple way back when, and we have red, and you can see the red for a little while was the angle, and that was like a 1 score back there. And then actually that might have been 1 1/4. I think back here, I think purple was a 1, right? You can see a little bit of remnants of, whoops, sorry, I misdrew the first one. Purple back here was a 1. Red got a little steeper. That became a 1.25. And when we couldn't attain the upper range of green, we said it's not a 1.5 anymore. Maybe I should go check my numbers. It might be 15175. Let me just make sure. No, 15125. Yeah. Right? So the red we had assessed as a 125, and then the green kicked it to a higher score. And we kicked into the green, and we had a good run with green, but then it couldn't hold on. But what I'm saying is I feel like the blue is the same angle as the green, which is a 1.5 score. That's what we scored green. So if I say blue is representative, then I would say organically it looks like a 1.5. I like Sandy's answer. Sandy said we can do whatever we want. We are Market Watch. We decide Market Watch as a group. It's a group. It's a collaborative effort. Good conversation. As I talk through it, I do think the blue is representative. That's the best current representation of the long-term trend in my representation. And what this has done is it represents that this correction is what ultimately created that shift from green to blue, but that we're now on the same line. I appreciate the challenge. Yeah, I appreciate you saying, wait, you can't change the rules of the game. And I'm like, I can't, but we as a group can. According to Sandy's definition of the group. All right, I am. Now, I'm going to pop it up a little bit. I think that's representative, right? When you look at it in the blue, it looks quite strong again. And it's regained prior strength. Okay, let's drop down. Interestingly, nothing new happened here for me. Right? You could say, oh, we got a new high. We're not scoring that we got like, okay, so back here the high was 600.17, and then here we got to 603. So we got like a 0.5% higher. Our score right now is a 1.75. That's a good solid score. We've been that score for since September, late September. We've had that score. Okay. I don't feel like anything's different. I feel like we have the same short-term trend that we've had since late September, right? We're on the same trajectory. In fact, you'll notice that the green and the blue are kind of mapping the short term. I think that the short term looks exactly as it did. 1.75 is a good representation. So if you're new or if you've only been with us a while, sometimes when we can't really pinpoint the trend, we go to a kind of a merit demerit system where we're like, oh, look, the buyer's got a higher high. Give them a quarter of a point. Oh, look, a higher low, another quarter of a point. Oh, we broke support, minus 0.25. Oh, we got a look, right? So we kind of mark these little technical achievements that buyers and sellers will make as they go through their daily tug of wars. But right now, that's not what we've had. We've had a pretty solidly established trend. We feel like we've pinpointed it pretty well. And I feel like that's the same trend. 1.75. That's where I am. Tell me if you're different. But where does that leave us? That leaves us up a quarter of a point. All right. Let's move on to volume. If you're new and you have a question, put it out there. I would imagine that most of the time somebody from the group will answer it before I do. That's the expectation I think you could have. Okay, let's keep going. What's next? Let's talk about volume. What is volume telling us about this market? Okay. First things first. No new volume last week. Nor did we expect to have that. Right? This was Friday's volume. I was actually surprised by Friday's volume. It produced 66%. Usually we don't even get to 50. Wednesday's volume, okay. Tuesday had the best. Monday. So we had 4 days. That was it. Market just sort of meandered up a little bit. No volume. Okay, so our volume score is likely to stay the same. Doesn't always stay the same just because we don't have anything new. We've got to look to the left and see. Interestingly, we have 1 day that's still a buy day. But that day I'm not going to give it to the buyers because I wouldn't give it to the sellers. In fact, when I see that buy day, I look at it and I'm like, I wouldn't know that was a buy day if I didn't have it marked on my volume panel. Right? If I didn't know, I'd be like, yeah, that's iffy. That could probably be anybody. That could go either way. But no, that was the buyers, but I'm not going to give it to the buyers. What do we have? We still have, and we're only going to have it for 1, 2, 3, 4, 5. We're going to lose 2 of our 3 breakout volume days, right? Remember, this is what kicked our volume right after the election. This is what kicked the volume into a minus 0.25 up to a 0.5. And that's the expectation. When we first break loose, when we first break out, volume will be a part of our analysis. When we move into a solid 7 score, I would expect the volume to be 0. I don't think that there's going to keep being breakout volume from week to week. That's not what I expect at all. I expect it to drop back to 0. And here you can see why that's going to happen. Because we're not counting this already. Because next week we're going to lose 1, 2, 3, 4. We're going to lose these 2 and this is going to be there. Which means I'm not going to count it. So next week we lose all of this. And then we just have this. Tie, sell, buy, tie. Tie goes to the buyers. That score is still a quarter of a point. This combination here still gets a quarter of a point. Here, I still give this a quarter of a point now, but this is going to drop off next week. So next week, without anything new, if we have another week like this week without anything new, I would expect us to drop to a 0.25. But this week, I still have both of these. So I put those together and I end up with a 0.5. Yeah? Anybody have something different? Let me know. Otherwise, I'm going to mark it as stay the same. No change yet. Okay, let's go to major market. I think sometimes what I don't like, for me, I have a lag on YouTube. And I don't like, I want you guys' responses immediately. So that's selfish why I'm going to make sure that I'm back on the Circle stream at least for Sundays, Mondays, Wednesdays, and Fridays. I think the Thursdays, Tuesdays, and Thursdays, I may either do the YouTube stream or a Zoom. I don't know if I'll do the Circle stream. We'll see. Okay. Let's keep going. Major market. Major market analysis. Let's reset this. And then we can reset this at the same time. What do we know? Obviously, we have an uptrend because that's what we'd expect. And what do we have? We have the NASDAQ at the top. We have the S&P right below it. We have the Russell right there in the group. And who's down below lagging behind? We have our large caps. The big boys that are slower to move. Okay. We move down to 133. What do we have? Well, look who's shot up to the front of the class here. The Russell. Second place NASDAQ. Third place S&P. Lagging, and only by a little bit, is the Dow. This is all very bullish. This is exactly the positioning of the markets we would expect that is indicative of a high appetite for risk. The market is positioning to take risk. They want to get into the things that can move, technology and small caps. Let's keep going. Let's drop to 66 days. What do we have? And at this point, remember that in September, in that correction that we were talking about, we had the NASDAQ, right? The NASDAQ was the top one that had corrected. And you can see that we're still seeing a little bit of remnants of that. The NASDAQ here is at the bottom. They dropped the worst when it came to this last leg down right here. But at this point, what do we have? Small caps at the top, S&P, and S&P and NASDAQ in the middle. No, sorry. S&P and Dow in the middle, and then the NASDAQ is a little bit below. But overall, still bullish. I mean, everybody's up. Do I look at the Dow and think, oh, that's defensive? Do I need to check you said I need to check my dates? Let me check them. I'm open. Nope, my dates are good. I'm all the way over. November 29th is what I'm seeing here. No? I can go back and see if my others were not right. No. I think they're all the way across. Which one are you concerned about? Let me know. I don't see any change. Everything looks great. We go down to 66 days. Everything is in place. Everything looks bullish. Let's drop to 22 just to see if anything's maybe popping out at us. So here the question is, when we see the Dow in a leading position, do we think, oh, that could be defensive? Well, not when the Russell is at 9%. I don't think, oh, wow, look at that. The Russell's up 9%. You can see that the S&P or the NASDAQ is moving back, trying to move in. No change for me. It's still that's what a strong appetite for risk looks like across multiple positions we have the NASDAQ and the Russell leading. Everybody's in a bullish position. There's nothing defensive. There's nothing that we're like, oh, what about this? No, I'm looking for it. Nothing there. Let's go to sectors. Same thing. Sectors, we actually spent a lot of time having conversations about the fact that it is weird to have NASDAQ is not at the bottom. Let's do that off to the side. I don't want to get bogged down by the setups. I think unless there's a huge fundamental difference, I don't want to get bogged down in the minutia of the positions unless there's a real disparity that you think I missed. Could the Dow pop higher as a result of NVIDIA being added to it? I mean, NVIDIA being added to it is going to give it strength for sure. Press, that's a good recognition. I mean, it certainly is going to orient it more technology based, right? Even though that is where the large caps are. It is clearly an ultra cap. So yeah. Okay, 200 days. What do we have? We have utilities at the top. Financials, strong. Discretionary, strong. That's growth. Communication services, strong. That's growth. Industrials, strong. So you can see 4 out of 5. We have one defensive that we said, you know what? It didn't really feel defensive during this run back here. This is like a cryptocurrency / AI fueled run, not I need to get defensive style run. The only thing missing from this first time frame is technology. It's down here, but coming back. Okay, let's go into 133. Let's see if there's a shift. Now what? Discretionary at the top. Let me make sure I'm all the way over. Okay. If you're new, what am I doing? If you're off by a few days like this, and it looks like you're close to the right, it can throw you off. You're like, oh, I'm going to squint. But really, you can see I need to be all the way over to the right. And what do I have? I've got discretionary. That's where the money's going. I've got financials. That's where money is going. I've got communication services. Yeah, we're all trading there. Oh, utilities. A little bit of surge. We were looking. I didn't see anything that enticed me. There could have been something there that you grabbed onto. I've got industrials. Industrials looks great. Looks great. The only growth sector missing is who? Technology. Right? There's times where technology will carry bullishness. It's the only thing bullish. Right now, it's the only thing missing from bullish. Very interesting. If you look at Apple, which we will, if you look at Microsoft, which we will, yeah, you'll understand. That's 20% of it right there. And they're not doing great. They're sideways. So it's interesting. Okay, let's go down to 66 days. Do we see changes in money flow or more of the same? Discretionary, financial, communication services, industrials, all the same. And utilities is there with everybody else. Who's there? Energy had a little bump. Technology, closer. Yeah, small caps love this. Even though the Fed conversation has stalled a little bit, we'll go look at the Fed funds rate. Mortgages just haven't budged. I don't think it's going to happen. I don't think I'm going to end up getting something for my daughter. I can't do it at 7%. That's ridiculous. What else? Let's go to 22 and see if there's anything. But I'm going to leave my score the same. It looks great. Who's at the top? Discretionary and financials Energy, a little bump. You guys see that? I don't know. We'll keep an eye on it. A little bump in energy. Industrials are there. Communication services are there. All of those. Yeah, I'm going to leave mine the same. Since we're here, let's just take a quick peek. Let me refresh this real quickly. For anybody who is new, this routine that we're going through, there's a course, the Market Posture course, and it's a short one. Steven in the chat mentioned trading foundations. That's the big one. Like if you've never traded a day in your life, you could start there and we'll walk through everything. Picking accounts, learning how to chart, learning how about risk management principles, learning about psychology, learning about, right, whatever it is. We've got some videos there. But there's a couple of easy courses that will get you up to speed on some of the things that we do. There is the Market Posture, and that's 6 components. We'll 12 to 15 minute videos on each one. What is the component? Why are we looking at it? What are we looking for? How do we score it? So that you can be like, oh, okay, that makes sense now. Trading plan. We have 8 parts to our trading plan. Typically, we do 1 part a week. We just, as a group, and I know that a lot of times nobody's doing their trading plan. I know it. Shame, shame, I know your name. But we're going to keep trying to work on those plans and get those plans into place. I've got some ideas for next year for us to work on things like that. So make sure you do that. What are we looking for? Okay, staying at 2-to-1. Expectations for the rate cut. When is the meeting? December 18th, right around the corner. That's 2 weeks from Wednesday. 2 weeks from Wednesday. Where will I be? Scotland. Edinburgh. Yeah, very fun. But I'll be watching. 2-to-1 expectations for the cut. And then I think we all agree it's likely to stall for a little bit. Clint said, do you think interest in SMR, small nuke reactors? I love those. It's so funny because I looked at those like 20 years ago and they were like 5 million a piece, and now they're like 25 million a piece. But yeah, you could like take them, drop them anywhere, and power entire things. Like it's pretty cool technology for sure. But I don't know. That's a great question. VST we have, I believe. Is that right? I believe we have VST and GEV. I don't think we have those other ones, but thank you for throwing that out there. Love the discussion on that. Amazing. Okay, let's get back to it. Yeah, sectors look great. Major market looks great. I mean, we could be looking at the best score we've had as a group. Right? We got to a 7 there, 7 there. Oh, this could be it, you guys. This could be it. In over 18 months as a group, this could be our best score yet. Santa rally, anyone? All right. Let's finish this analysis with the VIX. Let me go back out 6 months. Let me go to VIX. I mean, you can see back here we got as low as 1359 and now we're at 1351. Could someone be like, that's a lower low? I'm going to raise my score. Yeah, I guess you could try to make that argument. I'm not going to make that argument. It's not enough for me yet. 1.5. Remember, this is out of 2. If you're new, this is the scoring range. A 2, a 1, a 1, a 1, a 3, a 2. That's where the total of 10 points comes from. Remember that it's plus or minus. If it was a nasty VIX, it's not 0 to 2, it's -2 to +2. 1.5 is a good number, but we haven't even touched 11 or 12. So no, I'm good with my number at 1.5. No change. This is my final 7.25. Oh, that's a strong score, you guys. Strongest we've seen. Let's go back here. I'm going to go to a 2-year chart for just a second. And let me go back to the SPY. Okay. I want my 2-year chart, please. Okay. Now, our scoring starts right around this area here, around April of last year. And if you're new, I would challenge you to do this, right? Come back and look and say, okay, what was the score at any given time? What was the score moving through this? When we were looking at this market here, what were the scores? Well, we got to a 7 in February. We hit it a couple of times. So this is what it looks like when you're a 6 or a 7. Right? Back here we had 4s and 5s and it got pretty good. And where are we now? We're back to a 7. So how long can this last? Well, when we hit, 7 was there. Still went for another couple of months. When it first triggered was back here. That's when it first came out. And that's kind of where we are now. So for me, I think to myself, this looks great. I don't know if you watch the news and stuff, but there's been a lot of people that have come out and they're like, oh, the forecasts for the bullishness in 2025 are very strong. Great. Our forecasts for bullishness right now are very strong. Now, what does that mean? Does that mean that tomorrow we're going to go throw 15 new bullish trades on? Absolutely not. Because what we're talking about right now is market posture. Market. How do you see the market? That's not trading posture. How are you going to trade tomorrow? That's trading posture. If you've looked at the trading plan, that's a question I get a lot. What's the difference between market posture and trading posture? Well, market posture is how do you see the overall market, data, which provides things like strategies and risk, number of trades, right? It gives us overarching ideas. Whereas trading posture is what are you doing now, today, tomorrow, the next, right? What is the day-to-day, the execution, which is why we're going to meet in less than 24 hours before the market opens. Nothing else has happened, but we're moving into execution again. Yeah? So, I feel great. I think this is great. Let's get to the watch list and build a short list. But what are the expectations? We need a pullback. That's my expectation. Do you agree? Let me know. My thought here is the market has just gone on a move that we capitalized on, that we had trades on for, and now we're hitting the top of this thing. We're starting to pinch. Sorry, let me make sure. A little conversation between Steven and Press. I agree, you guys. Like I said, 1.75. I could see it. I'm definitely going back to a historical reference that I wouldn't expect you to have, and I would not argue against 1.75. Wouldn't make that. I agree with you. Yeah, Clint. Thank you. Clint had a great answer to Bob's question. He said, it's the same angle as the green. If you remember, we dropped our score from green because we weren't getting to the top of it. But what we're saying here is that we've actually reattained a new trend that we are getting to the top of if we redraw our trend lines to the same angle, but at a slightly lower level down. So you can see the blue is now representative more of the top, where the green is like, yeah, we're just not getting there. So I just let mine organically pop back up. And that was something we had been talking about, where we were like, hey, this might, just like we the drop from 1.5 to 1.25 on the long-term score was not induced by 1 week where we're like, oh, this week this happened, so I'm dropping it. It was like we had been talking about it organically coming down because it just wasn't getting to the top, and we're like, okay, we're there. Here we are. And I feel like the same thing happened with my long-term score here, where I'm like, even though we're not getting to the top, we're actually maintaining the angle of that prior scoring line of the green. Therefore, that's why I'm going to put my score there. So that was the thought process. If you disagree, leave yours at 1.25. Because once again, I find that if I don't do something 1 week and it was necessary, it will make me do it the next week. That's part of how this scoring system works. It's about us not trying to put our opinion on the score, but let the score inform our opinion, right? That's the objective. And the reason I keep saying thank you for challenging is because I have no doubt that there's times where my opinion comes first, and I need to make sure that it's the other way around. So I love it. Based on trades that are closing the profit over 75%, that's why I'm good to see a market posture. Right, Stephen? It should all connect. All of this should connect. If we're a 7, we should have a huge watch list. We should have no problem finding new trades. We should have plenty of stocks to put on our watch. We should be throwing stocks out because we're like, I've got too many, right? And yes, we should be right. 7, 8 out of 10 trades and cranking some profits, which is why Miguel's like, I've got 15 on. Well, if you're going to put 15 on, this is the market. Eventually we hit that cap where we're like, this is it. This is the market. I'm going to keep cranking. And then when something nasty, when negative shows up and our score drops from a 7 to a 5, we dial back and we keep everything we earned along the way. That's it, right? All of us are, we're just a cohesive unit of blades of grass working together to duck when it's time to duck, to get sun when it's time to get sun. Anyways, great conversation, the right conversation. Makes me feel like my North Star is the right place. We're going the right direction here, right? Steven said, took that Cisco trade, closed before the long weekend. Very positive. Love it. Love it. You guys. This makes me cry tears of trading joy. Okay, let's hit the watch lists. Let's see what our watch list looks like. I feel like we're going to have to be patient here. This is where it's tough. You're 7.25. You want to throw some trades down, right? Oh, Apple. You son of a gun. Did anybody get back in after the hiccup? I closed at the hiccup. And it just started going so slowly that I never got in. But it made the move we were looking for after, just kind of slowly came out of it. So I feel like even there we were right. And this is where the NASDAQ's starting to pick up. I'm seeing Apple do this. I can't do it until it pulls back at this point, though. Right? Not until it pulls back. Aflac. Okay, so maybe it flagged in the next week, right? So this is where things are starting to, it's already crossing. We're starting to see some things. Amazon doesn't look like it yet. AppLovin, I can't tell. I'm going to put it on my list, but that's a tough one. Real volatile right now. AXP, overextended, looking for the flag or the pullback. Okay. BAC, same thing. What do we notice? Financials have a high degree of correlation already. BK, put it there. All of those financials, same kind of a thing. Okay, that's my first one that I'm going to star next to, right? That's what I'm looking for right there. It's just made a beautiful move up to that new high. Pulling back, volume is dropping off. Look at the sellers just fall off the. This thing is getting ready for us, you guys. I'm loving it. Carrier, put a star next to it. Yep. That's a nice little flag move. Friday was flirting with a break. Didn't quite get there, but okay. Caterpillar, early, but we could get that pullback. CLS, I like it. CLS is a yes with a star, yeah? These all look reasonable, but the ones with the stars even more so. CMG. That one could go quickly. CNK. No, there's nothing there. It's still moving up. Coherent. So Coherent is pulling back. It's got a bit of a triangle shape right now. So the question is, are we willing to trade the triangle hoping that it would break and then run? Yeah, I think that's reasonable. I think that's a reasonable prospect to think about in a market like we have right now. Absolutely. Absolutely. Cisco. Yeah, if you booked a gain, it makes sense. Starting across, book a gain, and then what? Put it on the list for a new trade. The second I finish one, I want the next one. Be greedy. You're a 7 1/4. We used to play the Gordon Gekko speech at some of our presentations. You guys know the one I mean? Michael Douglas. Greed, for lack of a better word, is good. It isn't a 7. I want to push. Get your chips on the table. Okay. Diamonds overextended a bit. DocuSign pulling back. What's the problem here? You're very close to earnings. It's next week on Thursday after market. I just don't think you'll have time for this to show up. Otherwise, hell yes, I'd be looking at that. Fastenal. That only made half the move. So do I think it could have another bite? Absolutely. Made money on it, even though it only made half the move. I think everyone else did as well. Okay. What's next? Give me another one. I want another one. FI? Fiserv? Put it on the list. I'd love to see a strong list. Flex. Oh, yeah. What does Flex do? Why am I not even remembering? If you can beat me to it, I'm going to go look up fundamentals. Flex is... Oh, it won't give it to me, huh? Anybody know? Why can't I find what they are? Someone's going to tell me. I'm going to put Flex Limited. I'm going to put it with technology. I don't know, you guys. And I'm going to put a star next to it as well. How embarrassing. They're like, do you know what you trade? I'm like, I know the symbol. That's good, right? The symbol? Okay. Let's keep going. Fox. Nah. I don't like Fox. I'm getting rid of it. Not that I don't like the company. I don't like the stock. Bitcoin or the company. Bitcoin. Okay. We'll see if it can keep going. GE Vernova. Yeah. That's part of our nuclear SMRs, right? Gold is a bit choppy. GM. Okay, let's put it on the list of retails, right? Google, no, not yet. Goldman, no, not yet. Overextended without much pullback, not yet. Nope. Yeah, I got to be patient with some of this. Ooh, I like IBM, but I need it to pull back. I'm going to put it on my list, though. I will put it on my list. I took my eye off the ball with IBM. It paid International Paper. Yeah, I like that. IP. Small caps overextended. JCI. I like Fastenal and Caterpillar better. KKR. Still in it. What was the target on KKR? Does anybody remember? 165. Oh, look how close we are. I feel like we're going to get there. Is anybody still riding KKR for that 165 target? Come on. I think we've got it. MasterCard. Nah, it's overextended. Meta. Nah, it's just not there yet. Morgan Stanley. I think we've already got a pretty strong list, but yeah, let's put Morgan on there. Microsoft. No. MicroStrategy. It's a shark frenzy. If your stomach can handle it, there's a setup brewing here. Huh? If your stomach can handle it. I want to know if you trade it. NDAQ overextended. Netflix. Yeah, it's a little choppy. Nvidia. Put it on the list. Put it on the list. Nvidia. I still think it's getting some index effect and still has some of that to come. PLTR, still in it. It's still doing its thing. Its trajectory, it's in line. Who's still in that one with me? Yeah. PayPal. QQQ, nothing. Roblox. Look at you. What do we call Roblox? Communication services. Okay. That's a good one for communication services. I like that. That's got a star. Star it. Reddit. Communication services. I'll put a star by you as well. Look at these two little sneaky Pete's to steal Sandy's name, which I liked. Sneaky Pete. That's a good one. Sneaky Pete's. That's the name of a border casino right outside of Vegas before you get to Bakersfield, California. If you're driving, Sneaky Pete's. It's this old rundown place that has a roller coaster that I don't think has run in 25 years. Sneaky Pete. If you've driven 15 from Vegas to California, you know exactly what I'm talking about. Now there's an outlet mall close to it now. Look at Rocket Labs. Beautiful, but not tradable. Sea Limited, no. Southern, I don't know. I'm not really feeling it with utilities right now. I took one trade on it though, and it did well. XLU, there was a bunch of us that took that one, I think. SoFi, no. SPY. So the SPY is a little bit above my calendar now. Am I like, what am I going to do with that calendar? No, it's fine. It's fine. Where is it? Oh, this one is lost. I lost my connection. Sorry. We'll have to look at it tomorrow. We'll look at this. We'll look at the calendar tomorrow. It could even go a little higher still, and I'd be fine with it. It's just cranking. It's just building. It's just piling up some time decay for me right now. We put it on back here, down, up. It could go up and then come back down, and then it would just be like, bam, we lock it in. Lock it in. Where are we at? Oh, I'm a little bit over. Sorry, guys. Let me crank through the rest of this. TGNA. Didn't get to a new high, but I would think about that one. I'm not sure where that one even goes. I put these new stocks on, and I'm like, what sector is this from again? I don't even know. TGX, yes. I'm going to put that with the retail crew. Consumer discretionary. I like that. New high. T-Mobile. I hope you got a piece of that. I almost put the alert out, but we were looking at this one right back here. Overextended now. Toast. No. I know what Toast is. I was at a Black Friday thing, and I'm like, Toast. It's a payment processor like Stripe. I didn't know. Tesla. Maybe. TSM, no, but NVIDIA, yes. TTD, we've got better. Twilio, yes. Put it with the financials. That one looks good. That one gets a star as well. We've got some good stars across multiple sectors, even still. Trades are lining up. Don't think they're not. Overextended on Upwork, nothing there for us. Dollar pulled back a little bit. I'm not going to do the XLs today. I'm just going to do the standard stocks. We'll hit the XLs tomorrow. VRT, like GE Vernova in a setup type position. Love it. Visco, Victoria's Secret. Nothing there for us. Walmart, nothing there for us. And let me get down to Zillow. Shebang. If it pulls back, we like it. And there it is. Give me your thoughts. I think that the watch list is strong. I think the setup list, opportunity list for this week is strong. The market is strong. We're looking for a Santa rally. We got wins behind our back. You know what? Everything here. God, there it is again. Everything in this market is on point. Okay, let's go trade it. Thoughts, questions, or concerns? Let me know. Gonna be a fun week. Gonna be a fun month. I agree. I'm here for it. Let's do it. Tomorrow, back to the normal schedule. Back to our regular schedule. So we will meet at 9:15, 15 minutes before the market opens. I hope you can join us. Let's have a fantastic month. Ready for the holiday season. Thanks, everybody. As always, happy trading.